Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Friday. It is the 5th of April. Pretty much just a kind of a nice, easy, mellow end to the week as stocks kind of moved a little bit early in the day, but basically spent most of the trading day just kind of hanging out, doing a whole lot of nothing. And good to see you, Ilka. As always, I saw your tweet over there. We'll talk a little bit about that before we call it a day here. Today, you asked an interesting question about buying call and put options. So we'll hit that up a little bit before we call it a day. Before we kind of jump right into that, really of note, really it was the energy stocks that really got running here today. We're seeing lots of things either knocking on the door. Ilka shared Exxon. M showed EQT, shared EQT over on Twitter. I found a bunch of potential breakout candidates as I was going, through my routine for next week. So a lot of really nice looking strength. It must be John. Yesterday, John, brought up all the energy stuff, and we were stuck in that range. As we'll see, we were able to at least push out a little bit on the on XLE, kind of right there on the exploration and production companies. And hey, Micah, hello, Ed. Good to see you guys. I hope you all had a great day, both in and out of the market. On the earnings front, pretty light next week. It'll be the next one. Although at the end of the week, we will have JP Morgan, and I want to say Wells Fargo, some of our big banks will be reporting at the end of next week. So we are just about in earnings season, whether we want to be or not. Taking a look at the S&P quickly on the intraday, we had our gap on the open, got running for about an hour, and then it was Friday. We're extended. Bulls are in firm control. Good day to say, well, let's call it early, right? Let's go find something fun to do. And that really seems like, for the most part, from a broad perspective, that is kind of what the market did here today. Just, okay, we responded positively to the jobs report, or at least not negatively. Let's call it a week and go home. And I'm all right with that. I don't mind a nice dull Friday. But the end result, as we look at the daily chart, ends up being a pretty decent looking bullish candle. Once again, closing above everything as far as our moving averages, our recent breakout point. We still, of course, have some overhead, not terribly far away from us. We are still, much like a lot of things, we are fairly extended in some areas in the market. And all that means is we're extended in some areas of the market, right? It doesn't have to mean anything beyond that. It doesn't mean it has to pull back. It just means it could. Which would be, of course, normal and helpful, for new entries. Was not finding a lot of great retracement entries this week, as you can imagine, in the overall market. Although there were some in the staples that I thought were fairly interesting. So really, not a lot to say about the S&P. We closed the week strong, knocking on the door of 29. We're approaching those highs, so we'll want to be mindful of them. But we have a little bit of room between where we are and that real challenge as far as resistance goes. Nice bounce back day for the NASDAQ too. Of course, they dipped intraday yesterday, but really rallied and carried on that positive momentum. Again, when the bulls, or the bears for that matter, when someone is in such control, we see it time and time again. Any excuse is a good excuse, right? I guess that's why trends work. So I'll take the deal. But really just another day at the office over in the NASDAQ. Not a ton of movement in the Dow today, but to me, the most important thing is we did close above that breakout. So we confirmed yesterday's breakout via higher high and higher low. We didn't do much, as far as, making moves here today. But in my opinion, we did confirm that breakout, at least for another day. And good afternoon, Marquise. Good to see you. So just, not a lot to say. I mean, just a good day. Probably couldn't have asked for a better Friday. I don't know about you guys, but I was kind of on the profit-taking fence, going into today. Had that little gap on the open and never really saw a lot of sell signals. Made it a little bit easier to be brave. We'll see how that works out. So over in the rut, definitely maybe the most interesting price action here today, taking out not only resistance, but back above that 200-day moving average as well. Clearly, that was not a concern for buyers. I was a little concerned about it. I still prefer the other indexes even after today's movement. But kind of like the moral of this week has been, just have to keep tipping my hat to the rut. Find ways to just keep getting the job done. Really not a lot has changed. The 1605 or thereabouts. I mean, that's a lot of history. Beyond that is a great signal from a bullish point of view in my mind. I'll wait for it. I can understand the buying argument. There is some room between where we are and that resistance. I don't expect anything between here and there to, let's just call it 1600, to really scare away traders from a resistance and a price action perspective. But I still prefer other areas of the market. Probably will be a different story if and when we break out of all of this 1605 range. But that is a story for at least next week. Maybe a little later. We'll see. With the movement it had this week, can't put it past it. Over in materials, kind of took a day off. Doji right above that, again, much like the Dow, Doji, putting in that higher high and higher low. So showing some good relative strength on the intraday. This is a very extended area. We've basically just shot up from support through two levels of resistance. A little bit of a doji, probably helpful. Hard to make a case against this sector right now, in my opinion. Things are extended. I wasn't finding as many new trading candidates in this sector as I was hoping to find, but I really wasn't all that surprised with the sector overall, with the movement we've seen over the last week and a half. Still a lot of strength, way above everything. A pullback would be really healthy, in my opinion, at least, for this sector in particular. I would love to see that. I'm going to have to, just wait and see like the rest of us, though. I'm not going to bet on it happening. I certainly wouldn't be comfortable betting against the material sector right now. That is for sure. Over in energy, probably the chart of the day, taking out that 67, and whether or not you were concerned about this one-day break and fail, from a few weeks back, we took that out as well. I am certainly calling this a bullish signal. If we can just get a little bit of momentum to get us going on Monday morning, I am going to really like this area. There is room to run. So many stocks, like Ilka and I were talking on Twitter, there's just a ton of interesting looking candidates. If you are of the mindset that this is a bullish breakout opportunity, there's, Exxon was a good looking break. I thought, you have pullbacks on something like I can't remember what their name is because they were one of the many stocks I had on my watch list. You've got breaks, you've got XOP, the producers ETF, that's knocking right on the door. I think that looks a little bit appealing, but so many of them do. And so my job this weekend is going to basically find a way to knock that list down a little bit. I'm not going to trade 12 energy breakouts tomorrow. Hey Scott, good to see you, or on Monday, because just realistically speaking, for the most part, they're all going to generally likely go the same way. And maybe it's a little bit of an exaggeration when all of them, but as a whole, I think if the breakout runs, most of our energy stocks are going to have a decent run. If it fails, most of them are going to fall right back into their trading ranges. That's why I want to see that momentum on Monday to give that extra bit of confirmation for wimps like me. There will be a lot of interesting candidates. So as we're going through those lists, I think things to keep in mind is how close are we to earnings. Some of them will be closer than others. And if we're swing trading, and if you're like me and don't hold swing trades through earnings, that is a consideration. Obviously, the risk to reward. Some of them are going to offer better risk to reward profiles, not going to have as many, significant levels of resistance ahead of them. So we'll have to put our technical analysis to the test, I think, as we're kind of determining who is going on our energy watch list going into next week. As tempting as it is to go long, I think that's probably a little irresponsible, at least in my mind. One or two is probably going to be plenty. But I do like that break, especially if we can confirm it. I do absolutely think that is a good bullish signal over in the energy sector. So, and good afternoon to you. Now, am I saying your name right? Is it I'm or is it Imey? Or am I doing it wrong both ways? Probably both ways. I'm terrible with names. That's why I like Scotts and Eds and Franks. It's impossible to mess those ones up. So, but good to see you. Ilka over on Twitter, asked, about, buying calls up. He was looking at Exxon and options are pretty cheap. And so, ways that we can trade that. Buying call options when options are cheaper, certainly always going to be the first thing that comes to my mind in that type of scenario. If I'm bullish, of course, on the stock, if I'm bullish on the sector, if I expect some movement. So we'll assume for the sake of this conversation that that's where I'm at, that's where we're at. For me, when it comes to buying options, Ilka, my rule is a little different. I think you said 2 strikes in the money was your rule, and it's not to say that you're wrong and I'm right. It's that I'm me and you're you, right? But for me, I'm really focusing on looking for something approximately 60 on the delta. Now, where that usually is going to place me is about 1 strike price in the money. And not always, but as a general rule, it is about where it's going to place me. So I'm really focusing on finding that approximately 60 delta versus being at the money, 1 strike, 2 strikes, whatever it might be. I want that delta to, capture movement, if you will. Another alternative, if we're not interested in buying calls, it is a fairly aggressive strategy, and that's not a bad thing, not a good thing. It's just what it is. We could, of course, look to do a bull call spread versus just the long call, where we're effectively lowering the cost basis. It's going to behave very similar to a long call in the sense that as the stock goes up, we're going to make money. But of course, unlike just a long call, we have a limited upside on the trade. So that could be an alternative. They tend to be a little more mellow too. As far as, a bull call is definitely more mellow, at least to me, than a long call is. And that can be a nice thing. You guys know me. I'm not afraid to just like it to be very gentle and easy. I don't like craziness if I can avoid it. My rule there, Ilka, is a 0.25 delta or approximately. And I just like to say approximately. I think we're all rational, reasonable human beings. And so is 0.13 approximately 0.25? No, but is 0.23, is 0.27? Yeah. Same with the 60 delta. If it's 55 because the next one out's at a 70, okay, I'm a reasonable dude. I think I can make that call. But that's kind of generally how I will approach that. And probably with cheap options, probably the first thing I'm going to look to do. We could also kind of come into it thinking about, well, hey, maybe I start with a long call. And this is well beyond ExxonMobil. This is just kind of thinking out loud, just in general, starting with the long call while that volatility is low, while we have a good technical setup, with kind of the eye looking to convert it into a bull call a little bit down the road. We see some upward movement, work into resistance, convert it, into a risk-free trade like Noah talks, or just, convert it into a bull call spread. If it, kind of starts dipping down, then can sell that option against it. Okay, well, let's be a little more gentle if we are going to see a little bit of back and forth. So, yeah, exactly. Legging in on the trade would probably be where my head is, and that's kind of where my head is personally within the energy sector going into next week. Whoever the winning candidates end up being, my thought process is exactly that, Ilka. Start with a long call, assuming they are cheap, and I'm not going to do too many of these things because I'm a wimp, and then look to convert when the proper opportunity arises, if it does, I guess I should say. So I like that we're having this conversation because it means we're at least threatening that break. Individual rules are individual rules. So for me, I need it confirmed. I absolutely need it confirmed on Monday morning. So as excited as I am potentially for the sector next week, I still need that upward movement on Monday to confirm it, or, we'll be having the same talk maybe on Tuesday or Monday afternoon, or we'll be back in the range, even more fun. So as excited as I am, about a potential break over in the energy sector, I'm basically on the other side of things in the financial sector, very lukewarm one way or the other. A lot of the banks are approaching earnings dates. And so even though some of them are still appealing, the regional banks still haven't been challenged from the sellers. And I would really like to see what happens when they are. They're just getting too close to earnings at this point in time. The sector overall is kind of, and maybe not as crazy of a thing as the healthcare sector, but very similar to me, where it's just very mixed and very kind of blam. Over on the ETF, that at least for today, I was not the only one thinking that. Doji right at that 200-day moving average. So yeah, the market did this too, but we've really battled with that 200 for the last several trading days. Not terribly surprised. That is putting up a little bit of a fight, maybe a pullback. If we could get a pullback and then have some buyers, whether it ends up being a retracement, a bear retracement in those regional banks, which are just for me going to be difficult to trade as a whole because we are so close to their earnings. That's like next week, not next week, but 2 weeks from now, I guess I should say, where they're going to really start rolling in. That's pretty tight, in my opinion, for a swing trade. But that doesn't mean I wouldn't like to see it. I don't have to do anything. I'd still like to see it. Maybe if we see some selling come in there and then some buyers willing to step in, put in a higher low, catch back up to these moving averages, maybe this could be an area later in the week from either a pullback or a retracement perspective that could be interesting. Didn't really love much of anything that I saw. AIG did have a nice breakout today, a little earlier in the day, and I thought that was a nice break. I don't know that it's a great trading environment with the 200-day moving average kind of hanging out just a little bit above us, but I do think it was a pretty decent little break. So, I mean, there are still some good-looking stocks out there, but we still have a lot of those regional banks that are looking still a little iffy to me, haven't quite worked their way back into neutrality, and have earnings coming up right around the corner. Not a great area, and for me at least, going into early next week. Over in industrials, a nice little doji. I had to actually drag this line back today because you couldn't see today's price action dojing right at that 77 resistance level. So we're still knocking on the door. We know that this is a big deal. We can clearly see, if we didn't believe it was a big deal, we've watched it be resistance all week long, right? But we're really holding up. And so I am interested in pushing through that. I'm glad that it's taken a little bit of time so we can kind of reset a little bit. It's a lot easier, I think, at least mentally, to trade breakouts if they have a little pause before they break to the upside. I am still looking at that overall is what I'm looking for. The break to the upside hasn't happened yet, may very well not happen, still may need to consolidate and still may need to pull back a little bit before we get another wave of buyers in there. But hey, Jacob, good to see you. I'm still liking it though. And I think for the most part, the market is too. A lot of strength just holding up at resistance. Very easy to take profits here, I think. And folks really didn't. So that does get my attention, maybe a good way to put it. Still waiting for it though. A break is a break. It's fine to be looking for one. In my opinion, it's another thing to be assuming you're going to get one because you want one. Never logic I want to employ. I've done it a time or two. I regretted it as a general rule. So over in tech, much like the NASDAQ, just another good solid day. We are kind of hanging out right at that old high. If we go into a weekly time frame, this is kind of the peak of where we have been. The only real negative about this sector right now is it is very extended to the upside, at least in my mind. That's not a bad thing. It just makes it a little more difficult to want to jump into new areas right out of the gates for some of us, I guess. Consolidating, I would love to see a little more consolidation, but it has been so strong, as we all know. And certainly there are still some stocks that aren't extended to the upside, in the market and in the tech sector as a whole. So again, you're above everything. You're knocking on the door of an all-time high. I'd feel a little bit better if we had a little pullback and then took another run at that high, but I think you have to call a break of that high, which I don't think we've had just yet, but I absolutely think you have to call a break of that, a nice bullish signal, if that is where we end up going. And with the way that tech has been performing, my expectations are just that. Now, if we're looking for pullbacks, we might be finding more of those over here in the staples sector after pulling back into that old 55 zone, into that rising 20-day moving average. Was 20-day moving average, see if I can say that. We saw some decent upward movement here today in the sector. I still think you have to look at this from a pullback perspective. May need one more day, but I think, and I'm not going to really change it because 55 is the number for me still, and that just so happens to conveniently be where we hit on Wednesday. A little more upward movement would be really good confirmation, but I think you could make a very, very easy case that today was confirmation over in this sector. So going into next week, I am expecting it to try to rally off of that, continue this overall upward trend that we have been on, working into the 5650 range. Then I'll start getting a little worried about approaching some high points and double top area from back here, but we have some room to go over in the staple sector, in my opinion. Definitely the pullback area of my choice going into next week. You could make a similar argument for XLU. I don't think it was as nice looking as a retracement, at least thus far, but it is very, very similar in the sense that we did pull back. We saw some really nice upward movement here today. I'm still a little more neutral than bullish right now. Whether I should or shouldn't be, I'm not quite sure, but a little bit of slowing momentum. That pullback was just a little bit deeper. And as I was looking through the utility stocks today, a lot of them were. And I know that's just a personal opinion thing. You can't really prove that, I can't prove that this is too deep of a pullback or not, but I don't like it when they pull back this deep, start to see those moving averages turn, that 9 fall below the 20 now a little bit of resistance, a little bit of upward movement, putting us back on the right side of those moving averages could change my mind. But that's what I'm going to need to see personally. Now, I'm certainly nowhere near bearish, and I don't think technically you can make that argument until we're below 57 personally, but don't really love this pullback opportunity. I thought, last week I was really interested in a pullback, never really materialized all week long. We're here today, the pullback's still there. It just doesn't feel as good to me going into at least early in the week. We will see how it goes, pushing us back above that moving average, maybe back above these highs that we set up on Friday and Monday. I think that could be interpreted as a signal to the upside. I don't think I'm going to be all that interested in it, but I do think I would call it 58.20, basically looking at the high from Friday, the high from Monday, and of course, putting us back above those averages. I would call that a bullish signal. Just don't expect to be all that interested in it for this particular swing. Over in healthcare, pretty decent day for healthcare, but it is in a range. And as you guys know, when it comes to me and back and forth and indecision, I'm not in any rush. I will let it continue to battle it out as long as it needs to. Again, we've said it many times before. You guys have all seen it. You don't need me to tell you, but some of these stocks look great from a bullish point of view. Some of them look great from a bearish point of view. Just a very, very mixed bag in this sector. My plan is unchanged. Open either way. I just don't expect the strength of the sector. If I go bullish next week in the energy sector, I expect the strength of the sector to help my trade out. Should I or not? Well, we could argue that, but I expect it to. So if we can confirm that breakout. Whereas in the healthcare sector, I'm not really expecting the sector to really drag me too much one way or another. And that, of course, we've been very consistent in that regard. And that's just really how the sector has been behaving as of late. And good afternoon to you, Whitney. Good to see you, my friend. So we're still in this range. Really, I'm just going to let it continue to play out, let it figure itself out. We are really, really sideways. If we can get a break one way or another, that might be a signal, a broader signal to the sector as a whole. But right now, while we're in this range and having this battle, honestly, I don't want a whole lot to do with it. There are other areas that are just doing so much better, like our good friends over in the discretionary sector. You did see some of those brick and mortar types take some profits here today, but that's okay. We don't need to run every day working. We basically are now challenging that all-time high. We're close enough to call it there, I think. We're not technically there. We've got a little bit of room to go, but up at 117.52, that is a major level that we have to respect. Right, that is certainly that was a big deal. In hindsight, at least, selling at 118 was a really darn good idea. Now, do I expect that to happen again? I don't, but I will respect that resistance going forward. Beyond that, I still like some of the stocks in this area for next week, of course. But beyond that area, another good bullish signal. I've been very happy with the way that this sector has performed, as I'm sure most of you guys have as well. It's been pretty well behaved. It's moved pretty quickly and given us a lot of decent little opportunities since that initial break on 112 from a few weeks back. Would not have expected, especially last week, would not have expected to be knocking on the door of that resistance level. Anytime I'm dealing with all-time highs, I'm going to respect them, I think that's always the right way to go about it. But really, I do expect it. I do expect it to try. Now, I would honestly expect it to pull back before it tries, but again, that's a lot of momentum going on in this sector. I think you still have to like it a little less maybe than last week, simply because some of these individual components are extended. The ETF is at a resistance level, but as we kind of saw yesterday, some of those beat up retail stocks have really started to at least show signs of life. So, and if that can happen, I really do think there are going to be some interesting things going on over there. So, Scott, you got something going on Humana here. I think it's probably a two-pronged thing here. One, it is kind of hanging on this support level. All right, this was kind of an old resistance level, support level, and so I think maybe that is kind of what got us started here today. As we look at the signals on it right now, let's get rid of a few things so we can see it a little more clearly. Today was a pretty, in my mind, bullish signal, or at least not bearish signal. And what I mean by that is we basically kind of pushed through a lot, at least on this daily chart here, and we don't have a lot of resistance from where we currently sit until we approach this 280 ballpark on that daily time frame. Now, I always, in these type of scenarios, Scott, I always want to kind of come back in here and see what's going on, because my real expectations are going to be this 9 exponential moving average to kind of act as the 9 weekly exponential moving average to act as that resistance catalyst. My biggest concern from a bearish point of view on Humana, I still wouldn't want anything to do with it from a buying perspective. Personally, I would much rather be on the bearish side than the bullish side if I were, if I were on one side or the other. But my biggest concern is this a failed breakdown? Right, we did break down here last week with our tail, hitting an old support level, and this is a pretty respectable level. When you look at it on a weekly chart, I think it really can stand out that this 260 is an interesting price point, at least it has been historically. So my biggest concern in the short term would be, is this a failed breakout? So this is going to be a little bit of a difficult management, because you're basically going to have to apply your rules as far as how much are you willing to give it. A lot of resistance in that 280 range, where we've got that 9 exponential moving average. Not too far above that, we have the 50. I would be hard pressed to want to buy this chart today. I wouldn't want anything to do with buying something that looked like this personally. But I do think you have to acknowledge there at least are some short-term bullish signals that are kind of contradicting that argument. I mean, they are a little shorter term in my opinion, but that is where I would find myself. It'd be an interesting management for you because it is a little bit of a complex chart. There are some signals closing above that 9, coming off of that 260. Whether we like it or not, I think there's a lot of history there that we have to respect, taking out a little bit of resistance, taking out that breakdown point, closing above those moving averages. So I think there are some short-term bullish signals that are conflicting with some longer-term bearish signals. So I think time frame is really where you're at. Are you looking at managing off of these shorter-term signals? Fair enough, if that's your call. Are you managing off of these longer-term signals? Well, that's fair too. That really is. So good luck, whatever you decide to do, my friend. And I'll be cheering against Humana on Monday morning. So good luck, whatever you do decide to do. Back on real estate. I mean, what do you say about real estate that you haven't said, dozens and dozens and dozens of times? Just a good place to be. Just continues to creep up. Another day holding above that 9 EMA. Basically, it just keeps churning and churning and churning, regardless of what kind of day it is in the market. Pullback day in the market, we'll hold it. Boring day in the market, we'll run a little bit up, 0.77%. So, I mean, we definitely have nothing really new to report here today. Another day above that 9 EMA, well, hard to say anything other than that's pretty darn bullish, I think. So, and lastly, over in communication services, much like the broad market, little like tech, very slow day at the office. As that was just the type of day it was. So quite honestly, I imagine for the most part, your evaluation of the communication services sector really hasn't changed much today. Much like the rest of the market, I think you can make a case that maybe energy is in a changing formation right now, but for the most part, things are relatively unchanged. And certainly, I would say the communication services sector is right there with it as well. Facebook did hold for another day above that breakout point. Google, not a whole lot. Still a little iffy on some of the video game stocks, but I actually do kind of like the setup finally. And this is the first time I've been able to say it since, this year. Basically, I actually am starting to get a little interested in potentially an Activision Blizzard showing a little bit of signs of reversal. Not quite there yet. Gonna need to see some upward movement before I get in there, but I do feel like they're starting to show a few signs of reversal. And so for the first time, I've got a video game stock on my watch list since January earnings. And I guess that's a step for me. So I don't know that it's something for next week necessarily, probably not knowing me. But if we can take out this little top, continue that momentum, kind of reestablish the trend, well, we could definitely see you in a watch list throughout the spring and maybe early summer Activision Blizzard. And then by the time we get to the midsummer, hopefully your new game is out and I'm wasting way too much time playing that. But that's a story for another day. So metals continue to be volatile. We're not going anywhere. The close is very, very light here today. 0.06 on gold, 0.3 on silver, really nothing to see here. But again, just like we saw yesterday, we're seeing a lot of movement back and forth. Definitely a little bit of volatility going on. Gonna have to get off of a 1 hour chart. Man, will a 30-minute chart do it for us? Yeah, there you go. Big drop here, big dip here. We are seeing some increased volatility for whatever that means. Quite honestly, I don't really care because as I've said many times before, really it's 1280 and 1325. And while it is ranging in here, at least until I can trust it to want to stay in this range, at which point I could see an interesting case if we can start to, give me reasons to believe in 1280 beyond other than its history at 1280, which is good enough reason. If we can do that, maybe some cash flow strategies, but that is still probably at least 2 weeks away. And it's going to have to start behaving a little bit better. That extra little volatility on the day-to-day that we've seen over the course of this week, I didn't like the chart before. You start acting a little bit weird on the intraday, well, I'm definitely not going to like it after. So really not a lot has changed. I do think we have our short-term resistance at approximately 13. If that breaks, we're greeted with a whole bunch of other stuff on top of us, just like silver now. Major support at 1280 for me. That's really the big one as far as I'm concerned. And really the big resistance is going to be that 1283, that 1325. If we just look at it a little bit of a longer term basis, we can be patient. We can let it develop. There's still, if gold wants to have a run, it can get started without me, right? There's still a lot of room if we can hold this support. It's not like we've done a tremendous amount wrong, at least in my opinion, on this weekly chart, 1280, that holds. It really hasn't done anything but pulled back. I mean, think about, the swing trades in your lifetime. How many times have we seen a chart that looks like this? So, it's in a great trend. We have a nice red candle, then a hammer candle, then upward movement, the next candle. How many times have we all walked into that, right? I think we probably all have a time or two with our stop loss below that swing low. That was our confirmation. At one point, it was a big green candle, and we're pretty awesome. Upward movement the next day. Yeah, that's right. Looking a lot like a pullback, and then kind of start to get a little bit fuzzy, but still holding that support level. And that's why I think that 1280 is such an important price point, and I don't really think you can make a great bearish argument against it personally above 1280. That is that's a weekly pullback that is still in play, right? It's messy, and I'm sure folks probably wish they just would have jumped out at 1310 in hindsight, but support is still holding. That's not been taken out as of yet. So that's why that 1280 is such an important price point for me. And then the intraday, over the course of this week, spike in volatility. Yeah, that's a little bit out of what I'm comfortable with, at least. Over in silver, very similar type of a day. A little bit of volatility, started to run a little bit, but wasn't happening. Not here today, closing right there at that 200-day moving average. I don't know what somebody does with this chart, to be quite honest with you. Not pretty at all. We know that this 15 is kind of that major support level that it's kind of trying to decide if that's going to hold or not right now. Not a lot of great signals to say that it is, other than, well, it tends to do so, right? So I think we have to, let this battle continue to play out. Lots of overhead, as we've talked about before. For me, I really don't even know where the bullish entry could be, for me at least, on silver, if I'm not just betting on 15 holding, which that's not my style. I wouldn't be doing that. But if I'm not doing that, I don't really know where I would be looking to get in. So I'm going to say, just like I've said many times before, the break of 1610 or so is where I'll be looking from a buying perspective. Now, if we work our way back up, that obviously would take some time. Very good chance new things would develop. We're talking, a good chunk of time if we're having that conversation. Right now, we have to worry about 15 holding, right? Let's not get too carried away and think about how cool that breakout's going to be in September when we're just fighting for our lives here at $15. So maybe getting a little bit ahead of myself there. Over in natty gas, bounced back a little bit. Nothing really changed on the charting side of things. We did close the week below that resistance level. I'm going to come into a weekly time frame just to see if that makes it a little easier for us to see. I can get rid of you now because you were on the intraday. Just right back using that old resistance as our new resistance, right? So right now, I think as long as we're below that, we have to be skewed to the bearish side from a short-term perspective. Still, again, if I wanted to be bearish, I probably should be in already. I am not, as I've said many times before. That 250 is just, 260 is right here, just right below 260, and then 250, such a huge amount of history there. If we set up some movement, I still do like the potentially eventual break of this resistance. And that is the only real tradable signal that I can see developing. I can't imagine a scenario where it happens next week. And in the unlikely event it does, that means we saw a huge gap to the upside and it scared me right out of it. But I'm willing to wait and see. As long as we hold this support level, that would be okay. If we want to drift down next week or two, test that support, spend another 2 months going up and then breaking resistance, putting in a nice long W, I'm good with that. But short term, you may or may not be where I'm at right now. I think we still have to say that our signals are to the downside overall in this in the natural gas market right now. Of course, we know that the open tomorrow or on Sunday can impact that. It's not been quite as volatile lately, as we all know, but it certainly can still gap a little bit. So we'll definitely want to keep an eye on that. And then lastly, over on crude, kind of danced, last couple of days, trying to talk people into taking some profits. Take a couple profits. It's almost Friday. And hey, if you took your profits, can't complain too much because you had profits to take. But those of us, those of you who didn't take your profits, if you're long in crude, you were definitely rewarded with a really nice little Friday as we finished the week really strong, closing above $63 here. So definitely some nice movement in the energy, market across the board. Certainly crude was right in there, no doubt about it. We've got some resistance coming ahead, right? And so really the last couple of days is, do we want to lock in profits? Not really thinking a ton about resistance. We got a little bit of room to run, and everybody's going to probably call it something a little bit different. I'm going to call it around 64 as that resistance zone. Definitely an area that I think we have to respect, and at least short-term expect it to be potentially a profit-taking zone, or or something like that. Got a little room between here and there, of course. Just a really good solid day in crude. There is no two ways about that. So happy for you if you took your profits, because you took some profits. Happy for you if you didn't, because you made a few more profits. So either way, if you were a bull this past week and a half, or on that break of 60 or on the break of 58, even, you're a winner either way. So hats off to you. I know we got to wrap up here this afternoon. Very quickly before we do, anybody have a stock on your watch list that you want me to take to the scouting report meeting and fight for? I'm always interested in looking at a stock chart, and who knows if it'll win, right? But always open to it. Of course, the volume, the options, all that fun stuff does need to be there. So probably no penny stocks probably not what your guys' style is, but you never know when you're talking to a whole bunch of people. So ladies and gentlemen, it's been an awesome week hanging out with you in the market recap. As always, I certainly appreciate everybody's time. It's great doing this with you. A lot more fun with you guys than hanging out by myself with my old dog doing it. So thank you so much for joining me. If you are new around here, do be sure to subscribe to the channel and hit that notification bell. Join us over at Tackle Trading over on Twitter. You can find me at FrankMartin23 on Twitter as well. Certainly happy to see you over there. It's fun to be able to, stay in touch with one another, with all the good, solid members of Team Tackle. And there's always getting to be more and more of us. So always fun to see you guys over there. If you enjoy the market recap, it is helpful and appreciate it if you do give it a thumbs up just to let us know that we are on the right track. So thank you for that. I'm going to let you guys get out of here. I'm going to head on over to the scouting report meeting and see who's axed my setups. I've got too many energy setups, so I'm going to let some of the other coaches maybe whittle my list down a little bit. And then I'll argue against them just cause. But I'm going to head over, see what the coaches are up to. We'll get you the newsletter here and those reports for all our pro members here tomorrow. So have a great weekend, you guys. Be ready to rock and roll on Monday morning. Should be another interesting week in the market, but make sure you're taking some time to do the things that you love with the people that you love. It is the weekend after all. So I'll let you guys get out of here, but I will see you all same time, same channel here on Monday afternoon. Thanks, everybody. Have a great weekend.